Hi, what is CRR and SLR? These are the two terms which bankers normally use when they are talking about the reserve ratios that needs to be kept with the Reserve Bank of India. First one is cash reserve ratio. As the name suggests, it should be kept in the cash form. Second one is statutory liquidity ratio. This can be kept in any form as suggested by Reserve Bank of India. So, what is the current rate of these two? As of now, CRR, cash reserve ratio, is at 4.5% of NDTL. NDTL is net demand and time liabilities. I'll explain that little later. On SLR, the current rate is 18%. CRR can be raised or decreased depending upon the requirement of the currency circulation in the nation. RBI plans to do that and then executes it. The rate can hover from 3% to close to 18%. Whereas in case of SLR, the maximum is 40%, it can be brought down to even 0%. So what is the main purpose? What is NDTL? I gave a terminology called NDTL. NDTL is net demand and time liabilities. You are all aware, liabilities meaning savings account, current account and fixed deposit. RD also, RD or monthly also is part of it. But then mainly we will focus on savings account, current account and fixed deposit. These three are called demand and time liability. What is demand liability? Payable on demand. So the customer comes with a check and then asks money from the bank, that is payable on demand. So current account and savings account are called demand liabilities. Fixed deposit is called time liabilities because it is for a fixed period of time. So demand liability is balances available in the savings account and current account which can be paid on a production of a check or whichever format. There are so many other forms now available. So that is called demand liability. Time liability is fixed deposits, which is for a fixed period of time. So what is net? So we have seen, I told you NDTL. NDTL is net demand and time liabilities. Liabilities, we know that it is the money kept with the bank. Demand is current account and savings account. Time is fixed deposit. What is net? That means there is something called gross, correct? So gross liability meaning inclusive of the bank deposits. So when one bank like cooperative banks or any other banks, which can be a TNSC bank like Tamil Nadu State Cooperative Bank or District Cooperative Bank or regional rural banks which are there, they can keep their fixed deposit in another bank. That is excluded. Whatever customer keeps in the bank, only those things are considered for CRR and SLR purposes. That is why the terminology net has come. So now you are clear. Net meaning it is the savings account and current account deposit, fixed deposit kept by the customers with the bank. Demand is savings and current account, time is fixed deposit. So on these three parameters, bank has to keep, depending on every fortnight, they have to keep on daily basis 4.5% of CRR and 18% of SLR with Reserve Bank of India. CRR, as name suggests, it is cash in the cash form which has to be kept with RBI. SLR can be in the form of gold, in the form of cash also, and approved securities. Securities meaning the debt funds or RBI bonds which can be utilized towards SLR purposes. These instruments will remain with the bank itself. The bank which needs to keep it will hold all these instruments, whereas CRR will be kept with Reserve Bank of India. So this is the main difference. Why is it RBI wanting? Say for example, a customer is coming and depositing 100 rupees in the bank. How much is the money available for lending purpose? Say for example. So 100 rupees. So you need to maintain SLR 18% and CRR is 14.5%. So 22.5% has gone towards these two. So what is left with the bank is 77.5 rupees. on every 100 rupee being given to the bank, you have only close to 77 rupees only for lending purposes. That is the reason you have a interest rate difference in the lending. On deposit we pay certain interest, on lending we load the amount for the remaining. So if 100 rupees is given to you, you can only lend 77 rupees to the customer. This is exactly the reason the asset liability matching is happening. Now the bank is driving towards fixed deposits to meet the long term lending that has happened. Like home loans and all is for minimum of 10 or 15 years period. But then whereas FD is going for only maximum 3 years period or maximum 5 years period. 10 years, up to 10 years you can take it, but then the per se any investor is going for 1 to 3 years horizon for FD purposes. That is why bank is insisting upon fixed deposits for meeting these asset and liability requirements. Okay, cash, why is RBI insisting upon this CRR and SLR? CRR is for the purpose, even the RBI increases CRR, banks obviously need to pump in those money into RBI. That means excess liquidity which is there in the system, excess cash which is there in the circulation in the general public will be absorbed and then will be kept with the Reserve Bank of India. So now currently it is 4.5%. If CRR increases to say 5.5%, so the 1% extra net demand and time liability amount should be kept with RBI. So to that extent, the cash will be taken from the system which is there in the walls, which is there in the branches, will be kept with the Reserve Bank of India. So that much money will stop circulating. So stop going into the general public's utility purpose. So this is the main reason for CRR. What is for SLR? SLR is the lending ability of the bank. Supposing SLR is increased to say 40, banks are left with only 60 rupees for lending purpose. Currently it is at 18%. So you have close to 82 rupees available for lending purpose. So RBI directs banks to lending towards the improvement of economy by increasing or decreasing the SLR position. I hope this video clarifies what is CRR and what is SLR. If you have any doubt, please put it in the description. I'll be so glad to answer the queries. Please subscribe to KRUPA Krupa Vibes VIBES YouTube channel and then support me. So more videos, watch the YouTube channel. Thank you. Bye bye.